Another day, another story. Middle East tensions, inflation data send markets on a roller coaster, latest movements in stocks, oil, and currencies. Good morning, everyone, and thank you for choosing Market Briefing, market analysis, and financial news. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Market analysis, October 13, 2023. Kicking things off, U.S. Treasury yields are retreating and oil prices are on the rise amid escalating conflict between Israel and Hamas. The yield on the benchmark 10-year Treasury note is down around 5 basis points after surging yesterday following hotter-than-expected U.S. inflation data. Meanwhile, Brent crude oil has jumped over 2% and is headed for its largest weekly gain in 6 weeks. The flare-up in violence between Israel and Hamas has raised fears of broader destabilization in the Middle East that could hamper global oil supplies. This geopolitical risk is layered on top of an already complicated mix of factors driving market sentiment. The prospect of more aggressive Fed interest rate hikes along with ongoing economic weakness in China are also weighing on risk appetite. Looking at equities, European stocks are trading modestly lower after a volatile Asian session. The Pan-European Stoxx 600 index has dipped 0.2%, though gains among energy shares are limiting the decline. Danish insurer Tryg is up nearly 5% on the back of strong quarterly results. However, industrial company Sartorius is suffering a double-digit drop after cutting its earnings outlook. It was a mixed picture across Asia overnight. Chinese shares slipped after the latest inflation data undershot forecasts, pointing to continued drags on growth despite new stimulus measures. The CSI 300 index fell 0.7% and Hong Kong's Hang Seng lost 1.2%. Meanwhile, Japan's Nikkei managed a slight 0.3% gain. On the U.S. economic data front, the September Consumer Price Index matched expectations at a year-over-year increase of 3.7%. However, core CPI, excluding food and energy, edged down to 4.1% versus forecasts of 4.3%. The overall stubbornly high inflation reading has bolstered the case for another Fed rate hike in December. Markets are now pricing in about a 40% probability of a 25 basis point increase, up from 30% prior to the CPI release. Shifting to currencies, the US dollar is holding on to gains after yesterday's inflation-fueled boost. The dollar index is on track to snap a 6-day losing streak. The greenback saw particularly strong performance against the New Zealand dollar, gaining over 1% this week. It was up 0.3% versus the euro and 0.4% against the Japanese yen through yesterday's trading. Looking at key currency pairs, euro to US dollar has stabilized near the 1.0550 level after retreating from highs above 1.07 earlier this week. Pound sterling to US dollar has also given back recent gains, dropping below the 1.2200 handle. US dollar to Japanese yen is holding above 149.50, while gold prices are recovering above $1,875 an ounce following yesterday's slide. Before proceeding with our analysis, we would like to remind you that your support is very important to us. If you enjoy this video and find our content helpful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and provide you with even more quality content. Now, let's get back to the news on the financial markets and the latest updates. There are a few events that traders will be watching closely today. On the data front, we have U.S. import and export prices along with the University of Michigan's Consumer Sentiment Survey slated for later. Meanwhile, earnings season is kicking into high gear with results expected from major banks J.P. Morgan, Citigroup, and Wells Fargo. Let's take a deeper look at some of the key factors driving markets as we wrap up the week. The escalating conflict between Israel and Hamas poses risks of a wider regional war drawing in Iran. Such a scenario could send oil prices skyrocketing toward $150 a barrel, according to Bloomberg Economics. They estimate a full-blown Middle East war could shave nearly $1 trillion off global GDP. However, some analysts believe the muted market reaction so far suggests investors are discounting the risk of an all-out regional conflict for now. At the same time, prospects for more Fed tightening are also weighing on sentiment. Markets have been seesawing lately around the possibility of a higher terminal policy rate peaking above 5%. Thursday's hot CPI print gave fresh ammunition to hawkish Fed rhetoric. Additional inflation data in coming weeks will likely guide expectations around the potential for another 75 or 50 basis point December hike. China remains a trouble spot as strict zero-COVID policies and real estate woes drag on growth. Disappointing inflation figures out this week indicate there are still significant drags despite the government's efforts to boost the economy with subsidies, tax cuts, and infrastructure spending. Chinese trade data released today showed exports and imports shrank in September, underscoring the challenges facing policymakers. Finally, big bank earnings will provide new insight into the health of U.S. consumers. J.P. Morgan and Wells Fargo results typically offer an early read on the lending environment. Investors will be listening closely for any signs of deterioration in credit conditions or consumer spending that could signal risks of a potential recession next year. To wrap things up, it's a complex interplay of geopolitical tensions, growth fears, inflation data, and corporate earnings that has markets on edge as we head into the weekend. While stocks may face near-term volatility, any significant equity pullbacks are likely to attract bargain hunting given still solid U.S. economic fundamentals. Central bank policies and updates on the various risks highlighted today will continue driving market swings over the coming weeks. That's all for now. Thank you for watching. Key events this week. Eurozone industrial production, Friday. U.S. University of Michigan consumer sentiment, Friday. Citigroup, J.P. Morgan, Wells Fargo, BlackRock results as the quarterly earnings season kicks off, Friday. G20 finance ministers and central bankers meet as part of IMF gathering, Friday. ECB President Christine Lagarde, IMF Managing Director Kristalina Georgieva speak on IMF panel, Friday. Fed's Patrick Harker speaks, Friday. Some of the main moves in markets. Stocks. The Stoxx Europe 600 fell 0.1% as of 9:07 a.m. London time. S&P 500 futures rose 0.2%. Nasdaq 100 futures rose 0.1%. Futures on the Dow Jones Industrial Average rose 0.3%. The MSCI Asia Pacific Index fell 1.2%. The MSCI Emerging Markets Index fell 1%. Currencies. The Bloomberg Dollar Spot Index fell 0.2%. The euro rose 0.3% to $1.0557. The Japanese yen rose 0.1% to 149.62 per dollar. The offshore yuan was little changed at 7.3084 per dollar. The British pound rose 0.4% to $1.2218. Cryptocurrencies. Bitcoin rose 0.6% to $26,887.82. Ether rose 1% to $1,551.40. Bonds. The yield on 10-year treasuries declined 6 basis points to 4.64%. Germany's 10-year yield declined 3 basis points to 2.75%. Britain's 10-year yield declined 3 basis points to 4.39%. Commodities. Brent crude rose 2.2% to $87.85 a barrel. Spot gold rose 0.8% to $1,883.35 an ounce. In conclusion, we'd like to thank you for watching Market Briefing, market analysis, and financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more interesting news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.